If college is opened, all of you will come to college.
Yes, ma'am.
Uh, Not scared, huh?
No, ma'am.
No, ma'am, not scared.
Most of you are vaccinated now, no?
I know. Yes, ma'am.
Yes, ma'am. All.
But then also it's not, even if you are vaccinated, also you people are getting.
Yes, ma'am.
We are waiting, let us see, because tomorrow, according to the government, the colleges, the education institutions are going to be opened. So we have to see that if there is any directive from the college for the students to join physically, or it will be like what we had, no, the arrangement of 2 days in a week, if it continues the same. Or
Ma'am, today can we know that, ma'am?
yeah, it will become it today. If there is any change, then I think so it will be informed today
Okay, ma'am.
by the college. But as far as I know, I think so chances will be less, because still it is not started reducing also, no?
Yes, ma'am.
Yes, now students, so we are continuing with the concepts of national income, and we have finished with the concepts of national income, which was at the market price. Now we are starting here with the national income concepts, which we are going to discuss, or which is going to be calculated at the factor cost. When you say factor cost, it means we are talking about the incomes which is received by the factors of production. And cost, why we are saying cost? Because when the production process takes place, it is a producer who is going to hire these factors of production, and when he is hiring these factors of production for their services, in return he is going to give them the income. So it is the income generation, income received by the factors of production, but from the producer side it is his expense or it is his cost. So if he is hiring labor for his production process, automatically he has to pay the wages or salaries to the labor. So to a labor it is a income, but to the producer who has hired that labor, it is his cost or the expenses. So that is why we say that factor cost. Factor is the income earned by the factor of production. Cost is the cost, same is the cost for the producer also. Now we are starting here with the concept of national income at factor cost, which is also national income at factor cost. Yes. So when you talk about net national product, what we call it as NNP at factor cost, that particular concept of the national income is actually what we call it as national income. So when you talk about national income at factor cost or NNP at factor cost, it is the sum of wages, interest, rent, profit paid to the factors of production for their contribution to the production of goods and services in a year. So national income thus is the sum total of all the income payments made to the factors of production. So whenever there is a production, there is a generation of income in the form of rent, wages, interest and profits. If we aggregate all these incomes which are earned and generated in the economy, we get a figure which is called as national income. So student, I told you that when we calculate national income in three ways. First is in the terms of the production. Second is in terms of the income. So production is generating income as well as the output. So we are first, what we have calculated is the income in terms of the level of output produced. Now the concept says that we are doing the calculating the national income in terms of the income generated in the economy as rent, wages, interest and profits. So these are the incomes which are divided into 4 categories. Compensation to the employees, which is in terms of the wages and the salaries. Interest, which is the interest is the payment which is paid for the use of money. It is the payment which is given by the firms to the households who have lent money to the firm. Rent is the income which is earned by the individual because he is providing some assets for the use of the production process. And the profit is whatever amount of money is left after paying to all the factors of production will be called as the profits, and it is usually the residual income which is required to equalize the debit and the credit side of the accounts. Now students, if you look into it, I have been telling you this again and again. I tell you this many a time, students. This is what we make the profit, this is what we make the accounts. This is the credit and this is the debit. This I have drawn it before also. Here is the sales and here is the expense cost. All rent, wages, interest, profits, everything is recorded here, and here it is a sales. So we are calculating the national income. National income is calculated in terms of this one, that is the market value of goods and services, or it is calculated in terms of cost. This is what we are doing it here. And I think so all of you know, again and again I tell you, you have done, some of you have done accounts, some of you have not done. Both the sides are equal to each other. And in order to make sides equal to each other, usually there will be a residual entry here. Residual entry. Residual entry is nothing but the profit. Profit will be calculated after meeting all the expenses. Both should be equal to each other. So this is what we are doing it now. This is what we are doing it, students. We have already finished with this market price. This is what we are doing, the factor cost. So whatever is the value of the goods and services should be equal to the income which is generated in the economy by giving income to the land, labor, capital and entrepreneur. Now students, when we calculated this sales figure, I always tell you that sales is equal to the price at which it is being sold into the quantity. Now student, this price, this is the current price at which the commodity is sold in the market. And this price, students, this price includes the tax. This price includes the tax which the firm has to pay to the government. I repeat here, the price which is the price at which the commodity is sold in the market, includes the tax which the company has to pay to the government. Similarly, this price also may include the subsidy if there is a subsidy. So these are the two components which is included in the price, but these two components are not included in the cost, students. They are not included in the income which is generated. I repeat here that the price of any commodity includes the tax which the company has to pay to the government, and it will be included in the price. Similarly, if the government is giving any subsidy to that company, that is the amount which is being paid by the government to the company as a subsidy, it will be included in the price, but not, these two components are not included in the cost. It means that it is not going to the factors of production. So automatically, if we are calculating the net national product at factor cost, if you are calculating NNP at factor cost, what has been happening is that the price, that the tax which is included in the price is making the national income more as compared to the factor cost. I'll repeat here, the tax which is included in the price of the commodity is making the national income from the factor side more, because this is the amount which is going to the government. It is not going to the factors of production. So it means that if you have to calculate the NNP at factor cost from the market price, we will deduct the tax, because this amount does not go to any of the factors of production. Similarly, we talk about the subsidy. Subsidy is opposite of the tax, which means that the cost of production is more but the selling price is less. Again, I tell you, cost of production is more but the selling price is less. It means that my cost of production is 10 rupees, but I am forced to sell by 8 rupees by the government. So that is why, students, whenever we are calculating the NNP at factor cost with the help of NNP at market price, we are going to deduct the indirect taxes and add the subsidies, because indirect taxes are making the sale side more and the cost side less. On the other hand, the subsidy is making the sale side less and the cost side more. In order to equalize both, we deduct the indirect taxes and add the subsidies. This is what it is, students. If you look into it here, NNP at market price is minus indirect taxes plus subsidies will give us the NNP at factor cost. Because in reality, these two sides should be equal to each other. The debit and the credit sides should be equal to each other, but it may not happen because of this tax, the component of the tax and the subsidies. So in order to make it equal to each other, when we are calculating NNP at factor cost, we'll start with NNP at market price minus the tax and plus the subsidies. Then both the sides will be equal to each other. Are you able to understand something out of it, students?
Yes, ma'am.
Yes, ma'am.
What is happening today? Strength is also less and students are leaving in between. I can see hardly 38 students in the class. Yes, students, are you able to understand? Harshika, Manasvi, Anusha, Pradeep, Saurav, Naveed, Harshita, Pavani, Nikita, Akshata,
Yes, ma'am.
Saurabh,
Yes, ma'am.
Nandana.
Yes.
Yes, ma'am.
Yes, students. So these are the other concepts of national income at factor cost. If you are calculating GNP at factor cost, it will be GNP at market prices minus indirect taxes plus subsidies. Or you have to calculate GDP at factor cost. It will be GDP at market prices minus indirect taxes plus subsidies. Or NDP at factor cost, which will be equal to NDP at market prices minus indirect taxes plus subsidies. So whatever we are calculating factor cost from the market price, make it a point, you should remember that we should minus the indirect taxes and add the subsidies. And add the subsidies. So GNP at factor cost, gross national product at factor cost, will be equal to GNP at market prices in minus indirect taxes plus subsidies. Similarly, GDP at factor cost, GDP at factor cost is equal to GDP at market prices, which you have calculated it earlier, minus indirect taxes plus subsidies. Or we talk about NDP at factor cost is equal to NDP at market prices minus indirect taxes plus subsidies. So if you see here, students, this is what is common. So wherever we have to calculate the factor cost out of market price, the best thing which you should remember is minus the indirect taxes plus the subsidies. So these are the rest of the three components of national income. Yes, students, now we move on and we continue with the next concept, which is called as the concept of personal income. Now, personal income. If we do two more, we will be finishing today. Now, personal income, as the name suggests, which is the income which is earned by one person. Income which is earned by one person. So, I've been telling you that as a person, as an individual, supposedly if I am working somewhere, my major income is my salary. Apart from my major income as salary, there is always a possibility that I might be receiving other types of income also. What are the other types? In the sense, if I have given my house for rent, I get rent as my income. If I have deposited my money in the bank gives me the interest. So that is my interest income. And if suppose if you are also running a small business, or if you have share in a small business and the business is doing well, we earn our portion, that is called as profits. So personal income is nothing but we are talking about the income which is earned by the individuals. So if you are calculating, student, if you look into it here, personal income is the sum of all incomes actually received by all the individuals or households during a given period of time. So in national income, there are some income which are earned but not actually received by the household. So, sorry, students. So I'm talking about in national income, there are certain incomes which are not actually received by the individuals. They earn, but they are actually not received by the individual. On the other hand, there are certain income which is received by the individuals but not earned by them. So if you look into it here, students, health insurance, life insurance, provident fund contributions. This is our income, but we get these incomes deducted from our salary. Or taxes paid to the government by corporates. Undistributed profits. Profit that is belonging to shareholders but are used for further expansion. On the other hand, we have transfer payments. What are transfer payments? Transfer payments are, the best example is the pension. Though the individual is receiving that income, but he is not doing any work for it. So those income will be added to the national income, which can be pension, which can be unemployment benefits, which can be old age pension, etc. So all those income, students, which are actually earned by us, but we do not get it in the end. And all those income which we do not spend, but still we get it from the government, will be added to calculate the personal income of a person, of an individual. If I have to calculate the personal income of myself, I will add all the income which I am receiving it of any source, and I will add that income, and from that income some incomes I will do minus, because those incomes are not receiving by us. Those incomes are not received by us. Like provident fund contribution, all the salary will have provident fund contribution. What we are going to do is we are going to give it uh, and it is being saved for our future income. On the other hand, if I may not be receiving anything, but I may be receiving pension. So when we calculate personal income, students, if you look into it, personal income is equal to national income minus social security contribution, which includes health insurance, life insurance, provident fund contributions, minus corporate income tax, because this is the tax which is paid by the company. Then we have undistributed corporate profits. These are the profits which should go to the individual, but it does not come to the individual because the companies are keeping those profits for further expansion. And the last is the transfer payments, which includes any type of pensions or any relief payment or all the employment benefits received by the government. We are getting the money, but we are not doing any job for the same to get the money. So that will be calculated to ascertain the figures of national income. Figures of personal income, not national income, personal income. Now the next concept is disposable income, students. Whatever income we have received as a personal income, out of that we will pay income tax. Income tax is calculated on the basis of the income earned by the individual. So if you look into it here, disposable income is equal to personal income minus personal taxes. And as I've been telling you again and again, income is equal to consumption plus the savings. Whatever money we are receiving from the companies or whatever it is, from that we also have to pay the income tax, and whatever amount is left, that will be our income to spend or to save. That is why we say disposable income is also called as income plus the savings. Income plus the savings. And the last concept, students, per capita income. Per capita average income of the economy, which we calculate as by whatever is the national income divided by the total population. Total population. On an average, what is the income of an individual in the economy? That is summarized or calculated on the basis of per capita income. On an average, what is the income earned by an individual? That will be called as per capita income. Yes, students, so this is all for your concepts of national income. I have already posted this into Google Classroom. You can look into it again. And tomorrow we will be starting with the topic on the measurement of national income. Measurement, how do we measure the national income? Through the 3 different methods. I hope so, students, you have understood it. I am hoping, because I'm not seeing many students talking in the class today. So that is why I hope so that you have understood it. So if you have any doubts, you are most welcome to ask me. And please go through